Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 16th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, I do about those same things in these daily market commentaries where I talk about the economic data, the geopolitical environment, and how that is going to affect the overall markets. And I layer on top of that a little bit more where we talk about trade that I am putting on, usually talking about options, most likely talking about options, the right environment that we should put those on in, and how we can use that to increase the yield in an overall portfolio. So without further ado, let's get on with the economic data. It's going to start showing some of this coronavirus pullback in the economy. So we're going to have to start keeping a little bit more eye on that. We got Empire State Manufacturing Index a negative 21.5, expected to be a positive 5.1. Now, I don't know where those economists came up with that expectations of the Empire State Manufacturing being slightly above, but again, we did have a big miss there on that. We also are going to have long-term purchases going on for the treasuries. Another thing, Fed had an emergency meeting on Sunday night and lowered the Fed funds rate by 100 basis points, 1 full percentage point. We were trading right around 125. Remember, they did an emergency 50 from 175, putting that down to 125. Now another emergency meeting ahead of the regularly scheduled meeting coming up here in March, another 100 basis points. So basically, they fired a bazooka at this. They're trying to make sure that people understand that there is lending out there. They also are doing the adding liquidity to the market in about $1.5 trillion. So all of that will lower that Fed funds rate near to zero, despite the fact that we are probably, quote unquote at 0.25%, which is where we were back in 2009, 2010 area, where the Fed lowered interest rates to that historical low. We are right back down there, and it is going to be very close to unchanged with all of the liquidity being injected into the market as well. So that will help push that down. Now, they aren't really trying to spur spending or save us from this coronavirus. They're just trying to make sure everybody realizes that there is liquidity out there. Some people are even talking about closing the overall stock markets and things of that nature. I think that that would be a bad thing because it would add more angst to the markets if they weren't able to access. Some people are going to need to sell some stocks in order to make up for some of the lost income and things of that nature that they're going to be feeling with this slowdown in the economy. So people might want to sell, get out, and if they close the markets, that's just going to add up some pent up anguish going on. Here we go. We got crude oil back below $30 a barrel. We climbed above that on Friday. Markets really rallied into the day on Friday as well. But today we are seeing circuit breakers hit on some of the major exchanges, especially the stock market exchanges. And this is causing crude oil to come off, as well as there's a quarantine type situation going on here in the United States and across the pond, people closing up borders. That means there's not going to be travel, even if people are able to drive and use that demand on gasoline. People are being told to stay at home, so less driving. Traffic is really light just about everywhere, other than if you're going to Costco, Kroger, or something like that. Those guys are probably the ones that are going to fare very well during this, because they are moving inventory like it's going out of style, as people are buying meats and stuff like that, throwing it in the freezer to just make sure, in case they get quarantined, that they have enough food in their possession in order to last 2 weeks or so without being able to leave the home. So that is going to say that people aren't traveling as much. They aren't going to have that demand. We still have this thing going on in OPEC, where they are cranking out a lot of oil right now and going above some of their mandates. It's the time to start stocking up on the oil reserves for the United States and other major companies at these low levels, as far as I'm concerned. Start to put that in there. Gold futures are trying to make a rally off of the lows, but you can see we traded all the way down to 1450, hit that Fibonacci and bounced up and away. Now we're back above the 200-day moving average and to the point of control, which is right there at around 1500. Market should probably calm down a little bit there. I think that this is more liquidity. We're seeing, usually we should see this gold start to push higher with these equities really coming off. And, you know, the Dow Jones Industrial Average off by about 2,000 points. But there is no safe haven asset at this point in time in the market. So that is something that is desperately needed, where people would be able to park their money into something that is a safe haven. And we're just not seeing that right now. Bonds are up by about 1.5 off the lows. Market trying to make a bit of a move, but they don't have anywhere to go, you guys. The Fed has already priced in all of this. Interest rates are incredibly low, but if, you know, they're not having open houses and people aren't traveling, homes aren't going to get moved, and interest rates are going to relatively be stuck in this range for the foreseeable future. Actually, that was the I keep forgetting I put up the 10 years now, and that was the 10 years that bonds doing about the same thing. We've got the VIX spiking almost to 80, which is just a massive move. This volatility is here with us for quite some time, it looks like now, but the VIX up almost, what is that, almost 19 points on the day. It was up over 19 points earlier when we were testing that 80 handle. And there's the bonds trade again. Dow Jones Industrial Average, this is what we were talking about, off 1,800 points right now, but you can see that we are well above where we opened, which is why that's becoming a green candle. These rallies are happening towards the end of the day as some institutional buying starting to come in, and I think some retailers or retail sector of the economy where the retail trader is coming in and adding to their portfolios as well, just a little bit of it at a time. I don't think anybody's going in, you know, both hands trying to gobble it all up, but we are seeing some people doing some bottom feeding here and trying to drive that market a little bit higher, but we are well off the lows. As you can see, we traded down to 2387 there, which is another 1,000 points off of where we were from those lows almost. Then we've got the Nasdaq off by about 600 points, 500 points at this point. Was, you know, again, you can see well off the lows there as well, breaching below that value area. But we're very close to the point of control of the 52-week point of control. So that's going to be where people are looking at their portfolios and saying, you know what, if I didn't get out early, we're kind of right back there to where I am flat on my 52-week time horizon there, and that kind of is going to allow people to take a breather and say, you know what, maybe I missed out on that move, but I'm not really losing quote unquote money in my portfolio necessarily at this point. They're going to be looking at, okay, well, I bought this stock at the same price that we're kind of trading at right now, so it's going to hopefully add a little bit of a calming aspect there for the tech sector anyway. E-mini S&P is off by 200 points. Again, trying to make a bit of a comeback here as the volatility is still extremely high. You know, 200 points in the E-mini S&Ps is just a massive move. You know, 2,000 points in the Dow Jones is a massive move. So seeing some really crazy wild swings going on. I haven't done anything at this point, you guys. I'm sitting on my hands. The last thing I want to do is start adding in and around this area. I've allocated a lot of things. You know, I still have some short puts and stuff like that that I'm going to have to contend with. I'm going to be building out a portfolio here very soon in the next couple of days. If we don't get a bit of a rally, adding those, and then I will start talking about covering some trades with some call options. I'm going to be trying to lower my overall basis with that, staying mechanical in this type of volatility, taking advantage of that, and you know, that's what we're talking about in these webinars that we're doing right now, how we build out a portfolio, what we should do when these types of situations are happening to us, and how we can take advantage of that. yeah, you're going to see some P&L on the days down, especially with these massive moves, but those are going to be the days where we can sell into those rips like from Friday and then, cover those trades on the days after. So taking advantage of that high implied volatility by selling call spreads, or if you want to add to a portfolio, selling puts. I talk about the strike location and all of that stuff in these webinars, so check those out. Go to protraderstrategies.com and sign up for that. One other thing we have here is this disclaimer. I want you to pause this video, go over this, make sure you understand that there is the potential for losses, especially in these types of environments. We are an educational company. We're trying to teach you how to trade options. I'm not trying to get you guys to go with my trade recommendations. I don't do trade recommendations. I'm talking about trades that I do that I find they might not fit your risk parameter. They might not fit your market assumptions. So take what I'm teaching you as how to implement these strategies and then do that in your own way according to your own risk parameters. So please take a moment, read over this. Past performance of any trading system or methodology is not necessarily indicative of future results. All right, that's all I got, other than if you can't take that, take it easy.